Hey, this is Mike Addis. Thanks for joining us. It's always a pleasure to bring you these videos. So today we're going to talk about sales should mean profits. So there's a big confusion out there. Sales is actually income. But it doesn't make any difference whether you have income if you don't have any profits. What's the difference between income and profits? Income is the money that comes into your bank account. Profits is what you end up with at the end of the day, after you've covered all your expenses. Sales or income without profits has no value. So my first month in business back in 1985, I had sales of $67,000. My profits were about $6,700, 10%. My second month, I went up to $87,000. That's in my second month back in 1985. That's like $150,000 in today's dollars. I netted 10%. Why did I net only 10%? Because that's what I was shooting for. I was shooting for a 10% net profit after I had all my expenses. I paid for the product. I covered my telephone bill. There was no internet back then. I covered everything. And then at the end of the day, I was left with $8,600 on $87,000 in total sales, or total income. Today, I have sales of anywhere between $75,000 and $100,000 a month. So my sales haven't increased hardly at all. But my profits are up to about 37 to 40%. So did I actually increase my sales? I did, but not that much. Business has changed. It's evolved over the last 35 years. But the good news is now I focused on profits instead of focusing on sales. So what is sales? Let's do the equation. Hopefully we'll have this at the bottom of the screen. So sales equals income. Income minus your total expense equals net profit. So total expense would be what you paid for the product, your expenses paying yourself, your heat, your light, your rent, your car, your internet bill, anything that's related to your business. Those are your expenses. You have to take all those expenses out. What you get is you get net profit. Your net profit is not what you get to keep. Your net profit, actually, is profit before taxes. Does that make sense? So when you have your net profit after you take out all your expenses, that doesn't mean you get to keep the money. That's not your money. You have to pay the government 25 to 30% depending on the state that you're living in. So you have tax-free states like Texas and Nevada. I lived in Texas and Nevada. I didn't pay any taxes for those states. I had fees for the corporations, but my personal taxes were zero. In other words, I can lose money and have sales or income and stay in business. Perfect example is Jeff Bezos. I love Jeff Bezos' story. It's the greatest story I've ever seen. Nothing ever is better than the Jeff Bezos story. Amazon stayed in business for years living off debt, an investor in equity. In other words, investors gave Bezos the money to stay in business. So back in 1994, Jeff Bezos, who owns Amazon, sold 1% of Amazon for $50,000 to 14 investors. So each investor put up $50,000. That was a total of $700,000. So 14 investors at $50,000 each is $700,000. Those 14 investors now are worth $10 billion. So up until 1999, Bezos, Amazon was losing $5 billion. Actually, $5 million on $15 million in sales. However, he did turn a modest profit by 2001. Well, how was he able to stay in business so long? Well, he had investors that came and kept giving him money. Why? Because they believed in his story. But that's not what you and I are going to end up doing. Bezos was an extreme example. Why? He was in the right place at the right time. Internet was just getting going. He knew that was going to happen. He knew that 85% of the chance was that he was going to fail. He told all his investors he was going to fail. So he was an exception, not the rule. You and I need to look at income, and then we need to get our expenses in line and make profits. Most companies make very little profit. The average corporation, Fortune 500 company, they don't even make 10% net profit after they take out all their expenses and depreciation, all the accounting rah-rah they got to go through. But you and I own small businesses. We're small-time investors. Maybe you have $10,000, $20,000, $30,000, $40,000, $50,000 or $1 million, and you get to grow that over time. How do you grow it? You grow your business by reinvesting your net profits. So let's take a look at 5 examples. First, sales equal income, and income is what's deposited into your bank. Second, Income can be from a job, not necessarily sales from a business. So your paycheck is income. Third, income is not profit. Profit is what you keep after you deduct all your expenses. Fourth, pre-tax profit is the profit that you make after your expenses, but then you have to pay state, local, and federal taxes. You understand that? Warren Buffett says if you don't find a way to make money while you sleep, you will work until you die. That sums up everything. So it's the net income that you have that really counts. Don't let YouTube rah-rah guys confuse you when they tell you I had $1 million in income. It doesn't matter if you have $1 million in income. I know guys that bring in 10 times more than I do. So if I bring in 100,000, 150,000, they're bringing in $1 million a month. I'm making 35 to 40,000 net. They're not even making that much money. So what they have is they have a lot of income, but they have a very, very, very minor profit. So income is what comes into your bank. Net profit or profit is what you end up with after you paid everybody off. This is Mike Addis. Thanks for joining us on this short video. It's always our pleasure to bring you these videos. We love doing them. And we know you like watching them. So please don't forget to hit the subscriber button. We had a couple of videos. We had 30, 40 comments in one video. It's like so exciting. We're able to answer these comments and then make our videos better. Thanks for joining us. Sales should mean profits. Don't forget to subscribe. Thanks for joining us. See you in the next video.